Did you hear? Germany's top trading partner isn't the US anymore, it's China. That's right. After years of the US and Germany dominating each other's trade charts, China has swooped in and taken the lead. This isn't just a minor shuffle in the rankings, it's a seismic shift in the global economic landscape, and it's got everyone from politicians to business leaders to everyday workers buzzing with questions and concerns. Here's why everyone's talking about this global switcheroo. It's not just about numbers on a spreadsheet. It's about shifting alliances, changing supply chains, and the future of how the world does business. When a powerhouse like Germany changes its main trading partner, the ripple effects are felt far beyond Berlin or Beijing. For years, the US and Germany were trade besties. Their economic relationship was the backbone of transatlantic commerce, with billions of euros and dollars flowing back and forth every year. American companies relied on German engineering, while German firms counted on the vast US market to sell everything from cars to chemicals. But in 2025, China took back the crown as Germany's biggest trading partner, edging out the US by just a hair, about €500 million. That's a razor-thin margin, but it's enough to make headlines and spark debates in boardrooms and government offices alike. The numbers tell a story of shifting priorities and new economic realities. So what happened? How did China manage to overtake the US in Germany's trade books? And what does it mean for the future? First, US tariffs made German cars and machinery pricier for American buyers. These tariffs, meant to protect American industries, ended up making it harder for German companies to compete in the US market. Suddenly, those famous German cars and high-tech machines came with a much steeper price tag, and American consumers started looking elsewhere. Then, the euro got stronger, so German goods were even less of a bargain in the States. When the euro rises against the dollar, it means American buyers have to pay more for the same German products. This double whammy of tariffs and currency shifts made the US a tougher market for German exporters. Meanwhile, Germany's imports from China jumped big time. Think more electronics, more gadgets, more made in China. Chinese manufacturers have become the go-to source for everything from smartphones to solar panels, and German businesses are eager to tap into China's vast supply of affordable, high-quality goods. Here's the scoreboard. $163.4 billion in Germany-China trade, just topping the US at $162.8 billion. It's a close race, but China's edge is clear. These numbers aren't just statistics, they represent millions of jobs, thousands of companies, and the direction of the world's fourth largest economy. And get this, German exports to the US dropped hard, especially in August. Factories that once hummed with activity for American orders are now facing slowdowns, and some businesses are rethinking their strategies for the US market. Exports to China also fell, but imports from China shot up over 8%. That means Germany is buying a lot more from China than it's selling, deepening its reliance on Chinese products. This isn't just about trade numbers, it's about who controls the flow of goods and who sets the rules in the global marketplace. Why does it matter? This isn't just a story for economists or politicians. It affects everyone, from factory workers in Munich to tech shoppers in Berlin. For Germany, it means more dependence on China, and experts are worried about putting all those eggs in one basket. If something goes wrong in China, like a political crisis, a supply chain disruption or new trade restrictions, Germany could be left scrambling. The lesson from recent years is clear. Over-reliance on any one country can be risky, especially when that country is as powerful and unpredictable as China. For the US, it's a wake-up call about how tariffs can backfire. Instead of boosting American industry, the tariffs may have pushed one of its closest allies closer to a major rival. It's a reminder that in today's interconnected world, trade wars can have unexpected consequences. And for China? Well, it's a victory lap in the global economy. China has shown it can not only compete with the US, but actually surpass it in key markets. This boost strengthens China's position as a global economic leader and gives it more influence in shaping the rules of international trade. Will this change stick? Or is it just a temporary blip in the ever-shifting world of global commerce? Only time will tell, but one thing's for sure. The world is watching, and the stakes couldn't be higher. Stay tuned. Hit subscribe for more world economy news in plain English. We'll keep breaking down the big stories, so you can stay ahead of the curve in this fast-changing world.